You saw the dollar index and bond yields gain as the U.S. Fed started to give future guidance. So Powell did say that Fed is not in a rush to ease policy, and 50 basis points is not the new pace. And that really led to profit taking, so much so that the gold prices fell $40 as Powell was speaking. But markets will now watch out for the Bank of England, Bank of Japan monetary policy meeting that is in this week as well. For gold, it also is about the Western investors buying it quite at quantity. Not just gold, that is exactly what we saw happen in the industrial commodities as well. So initially there was a run and a rush on the higher side, but after that the crude oil prices came off as well, and we saw prices decline 0.5% overnight, and that's exactly what the metal prices also did. Zinc slipped 1% overnight, so was the case with copper. Aluminum fell 0.5%. The markets this is a reaction to the Powell testimony, and also the Chinese data has been on the weaker side, and that started to take over as well.
Right, Manisha, thank you so much for that. We'll keep an eye out on all these developments out here. We'll take a short break for now. On the other side, we'll have Siddharth Khemka of Motilal Oswal Financial Services joining in for some fundamental stock ideas.
A little while ago, I got a very nice call from Kamala. No, it was very nice. It was very nice. It was very, very nice, and we appreciate that. It's a dangerous business, however, being president. It's a little bit dangerous. It's, they think race car driving is dangerous. No. They think bull riding, that's pretty scary, right? No. This is a dangerous business, and we have to keep it safe.
We can expect on inflation next, and also throw in a word on the other major central bank, right? Tomorrow we're all watching out for the Bank of Japan, and I think the expectation is that at least tomorrow they won't do anything. But a section of the market still believes that if they need to hike, they will, irrespective of what the Fed is doing. Would you agree?
Yes, I think whereas for the U.S. there was a lot of uncertainty about whether in fact they would do 25 or 50 basis point cut. I think that people over the past week have really moved around that these expectations quite a bit. But I think overall, the path for the funds rate is pretty clear. The direction is downward. The question was, 75 basis point by the end of this year, 100 basis point by the end of this year. Now it looks like it's more going to be 100 basis point at the end of this year, with another 25 basis point cut in November, another 25 basis point cut in December, as based on the SEP. But broadly speaking, this is not really changing the market expectations. So whatever the commodities were pricing in and other central banks were pricing in is not radically changed by this new policy decisions today, irrespectively of all the uncertainty that we've seen over the past week. I think what's pretty clear is that the Fed is going to be cutting more. It's going to be. It made very clear this, I think, today that it's not going to cut rates at a very rapid pace. It's no longer going to do 50 basis points. It's more like in the 25 basis point range, unless we see a very substantial deterioration in the labor market. And so I think in that respect, they project an economy that remains quite resilient, continues to grow solidly. That's going to be favorable for overall global economic conditions and supporting the world economy as a whole, as well as commodities as a whole.
Sure. Sure, Mark, that point's well taken. So if this continues to be a gentle rate cut cycle, then I think the markets will absolutely love that. But just finish the other point on the BOJ as well. Do you expect the BOJ to continue hiking? And if that happens, then, I mean, I don't know, what precedent do we have where one major central bank is cutting and the other is hiking?
Well, they still have a large discrepancy in terms of rates, in terms of levels, and there are different stages of the cycle. The Bank of Japan is also dealing with inflation at a different cycle than the U.S. So, as part of where they are going, they may converge eventually, but for the time being, they may well proceed in different directions.
All right, gentlemen.